The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends, as we start off today. We're off of 14, I'm going to call it 15 points on the S&P cash at 2070 with 2.4 billion shares of volume picking up just a little. As always, we meet at this time.
The following takes place between 2 p.m. and 3 p.m.
Every trading day, actually starting to think about vacation season. And that is, of course, when I like to go, when things are going to get quiet. Of course, we've got Memorial Day on the 30th, which is on a Monday. So I'll probably take that Friday off and come back on Tuesday, kind of make it a 4-dayer instead of a 3-dayer. You have to kind of pick your battles where you can, but normally you're pretty good at having a quiet day on that Friday going into a 3-day weekend. So why not make it a 4-day? So I'll be gone that day, at least. I'm going to see what else I'm doing that weekend, but I think probably do some sailing again if we can get all my buddies together once again. Anyway, what we do have is a market that is setting up for declining volume and declining, at least market makers think, declining volatility. Why the S&P cash looks like it's going to be bouncing around these levels, not much higher, not much lower, at least into the 20th for expiration, so 9 days from today. We see a lot more weakness. And I think I said it yesterday on the show. We're down to one FANG stock, and Amazon itself almost holding up the entire market, maybe Facebook too, but not a lot going on out there. Incredibly narrow leadership in the market. But if you got a long-term view, I think you can remain short. If you've got a short-term or maybe a short-medium term, it probably, if you're in the S&P kind of stocks, my guess is flat to middling. It looks to me like option market makers are going to try to keep this market as flat as possible into expiration. But we will know for sure when they finish placing their bets today. If we were to see the S&P maybe close about 2075 on the S&P cash today, I suspect that would be confirmation that they're done pushing it down. It looked to me like they were pushing it higher as they were pushing out calls yesterday, and now they're pushing out puts today. It looks to me like they're trying to sew this thing up and at least just have kind of a standoff, Mexican standoff into a week from this Friday for monthly expiration. Of course, the 30th takes us into what is Memorial Day and a 3-day weekend. Normally, across summertime, you see these big 3-day weekends change at least character, if not direction in the market. I suspect that if the market falls apart, it will fall apart maybe before then. But if we continue to kind of drift a little bit higher into those days, don't see much action, I would not be surprised to see that the weekend or the couple of days after Memorial is when we start seeing the big pullback that has been indicated for about 3 months with price and volume in the markets. Anyway, time to get this party started.
Then it's all just a little bit of history repeating.
As always, you can give me a call at 877-927-6648. Email me at path@tfnn.com. And what else? You can post a message in the den. So feel free to do any of those things. We'll get to them. We always answer email every day on the air. What do we have going on for history today? In 1973, the Depository Trust Company is established to smooth the delivery of securities and provide a centralized electronic safety deposit box for stocks and bonds. Before then, it was catch as catch could, and it was not uncommon to see things kind of lost for a while in the paperwork shuffle. Wall Street was late to computer dumb, but computer D did come along in 1973. Also on this day, probably a much bigger deal when we look at what technology has done for the NASDAQ and the markets as a whole. Software developers Dan at Brooklyn, who I've met and talked to numerous times, and Bob Frankston introduced a product called VisiCalc. It's the first electronic spreadsheet. Suddenly, the PC can save hours of tedious work for its users. And suddenly, investment bankers have a tool that enables them to calculate changing values of leveraged buyouts, corporate mergers, and almost instantaneously. The spreadsheet is one of the secret driving forces behind the LBOs and takeover boom of the 1980s, as people who can't even do their own math acquire the ability to place values on businesses. I think I met Dan in 1982 or 3, maybe even 81. I had his first spreadsheet for the Apple II, and he was making trips around. Very interesting gentleman. He developed the spreadsheet because in the olden days, when they were going to college, they would just basically do the exact same thing, a spreadsheet on a chalkboard, and every time they would change one level, they'd have to go back and literally calculate every box in there. He was a budding college student, but was taking programming and figured out how quickly he would be able to do this on a PC compared to a chalkboard, and wrote his I think the first version of that in 1976. He was a flower child, a person of the 70s, or actually late 60s. And even though people asked him repeatedly to go ahead and put a patent on it, he never did, opening the way for many people to make billions and billions on his, mostly his invention. Bob Frankton, kind of more in the backside, not much in the way of inventing, kind of did a lot of the backup work for Dan. Most people think that he's really the guy that gets 80% of the glory for coming out with a spreadsheet. It's not a day, I think, that's gone by in 20 years that I haven't used a spreadsheet of some measure. You can get them absolutely free today, which is kind of interesting. But one of the best books, especially if you're ever trading technology, to read is a book called Accidental Empires. And it traces and goes through the veins of how things actually happen. A lot of people, thought that they were very smart. A lot of it had to do with just being there at the right time. He was one of these gentlemen. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And my follow-up point to this, because it is a big day in 1979, was that basically the Apple II and Apple as a company would have been bankrupt by 1981 had it not been for this program. This pretty much, I'm going to say somewhere between 60 and 70% of the sales of Apple II products had to do with this one single program. Other people bought other programs, of course, but almost every MBA that either was coming out of college, still in college, or had just graduated from college, bought an Apple II, and of course VisiCalc, and from then on pretty much stuck. But you can't think about Apple and Steve Jobs knowing about VisiCalc coming out, because they had no idea. And of course he'd actually written it for a mainframe, I think, or a mini, maybe a PDP-11 or something like that. I think he started writing it in 76, if I remember right. It's been a long time ago that I talked to him. But what you couldn't have seen was the empires that would come out of all these random things kind of coming together. If it would have happened in a couple more years, there would have been no Apple. They were pretty much broke for the first time. Of course, in 86, 87, we're pretty much bankrupt a second time for Apple. And guess what happened? Somebody strode in off the street and showed them a product that no one heretofore had thought about for a PC, and that was desktop publishing. And that was Aldous, a couple of guys just in off the street. And of course, as Steve Jobs likes to say, you can only connect the dots backwards. You can't connect them forwards. And you can connect him leaving college early. I'm talking about Steve Jobs, and hanging out in classes like calligraphy, where he was able to have specialized fonts, and developing that starting at about 1983. Of course, when the product came out in late 84 and 85, No one really knew what to do with all those fonts, but a couple of people did. But again, saved out of the fire and at least able to go on from there. But a great deal is put on as people in Silicon Valley as being the smartest people. The question is, would we have not seen somebody else come out if they'd have this thing come out just a couple of years later? Things could be tremendously different. But there's a good reason why that book from Kringley is called Accidental Empires. A lot of these things out there no one could have foreseen. And how many computer companies can we think of that went bankrupt from about 1975 through about 1985? It was pretty brutal in those times, and that now Apple, of course, the biggest purveyor of consumer electronics, and not really typical computers, but handheld digital assistants with phones. On this day in 1979. Live streaming will be starting tonight for Netflix. Chelsea Handler used to have a show on E, the only one I ever watched. Kind of interesting. I always loved her show because I wanted to be her. She really never did much of anything. She would hire for, I think they were paid 50 or 75 bucks a night to come over to the studio. A lot of the best stand-up talent, they'd talk about during the day what they were going to talk about. And, of course, the stand-ups would just rip on all the people and the news of the day. She really didn't have to do much for the first 20 minutes of the show. Then she interviewed somebody for about 5 minutes. Not all that great a interviewee or interviewer, but passable. My point in this is, of course, Chelsea Handler, you got to think of her kind of like I've thought of other shows, and that is there are several of them, and that is these people host these shows, not very funny, not great comedians. There's at least a couple of these things that run all the time. They actually drag on really good comedians, and they tell the jokes. And these guys kind of lionized as great thinkers. And all I'm thinking is, man, these guys are probably the equivalent of Tom Sawyer, getting everybody to paint the fence for them. Not particularly great at painting fences, but got everybody else to do it. Of course, if you're an up-and-coming comedian, you want to do well. What I'm thinking is that the chances of this being a great and successful show, probably not huge. I think that, of course, near real-time video, in fact, you know, her show that was on at, I think it was on at 10 o'clock at night, Eastern time, maybe 11 o'clock Eastern time, I don't remember now. But it would come on, but it was recorded a couple hours earlier. Netflix is going to do the next same kind of thing. It will be recorded probably somewhere around 6 o'clock Eastern time and start streaming out at 10 or 10 o'clock or later. But the whole idea that this is going to be a big winner, I think, is somewhat problematic because I don't think she was that funny. I think she was like several other people that just had a real good idea, and that is bring on a lot of funny people. I'll just sit here and laugh, make some wisecracks, and that will be it. Never thought she was that funny. Well, the only reason I bring this up is, of course, many people have gone from one vein of comedy. I can think of Stephen Colbert, whose show is failing, and just how much Netflix is paying Chelsea to do this. Not saying that there aren't any funny women. I think most of the people that worked for her were at least 2 or 3 or 4 times funnier than her. But Netflix has had a couple of bombs, and the question of whether or not Netflix actually proves that this will work, I think, is academic. Everybody else will probably start doing it and have near real-time video. I'm just wondering about whether Netflix is kind of going down the road of a few real bombs after what's the name of that thing? Marco Polo, a couple other ones out here have not done very well. And we will see. And of course, Amazon actually talking about doing something very similar also today. This show will air every Wednesday, Thursday, and Friday. But I think it's going to have a big deal to do with how Netflix does going forward. The reason why this is why they're paying her a great deal. This is one of the less expensive ways to generate content for Netflix. If this is not successful, it may be them going back and paying wads of cash again for decent movies, most of which they have not aired. I continue to try to find new movies that they show every month, and it's getting rather dry. You know, some of their new stuff that their own content, pretty good. Movies, for the most part, not much I want to watch. Maybe one or two a month now. We'll be back in a moment. We've got lots of charts to look at and more things to talk about.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, we've got some interesting email. You can send it to me at tfnn.com, at path@tfnn.com. And most of them have to do with Chelsea. But I just think Joe Coy and, man, there was 3 or 4 other really funny guys and gals that were on there all the time. But toward the end of the show, she just brought a bunch of people that were mean and sad. I think that was kind of the end of the show anyway. But it was very interesting for live topical humor and several different views about what's going on. But Joe Coy probably did 90% of the heavy lifting on that show. He's a pretty big stand-up comedian now. But we'll see. I just didn't think that she had that much to say. What else do we have going on? We have, as yesterday we talked about the weakness of mall stores, and we have yet that again today. Macy's off at 13%, talking about its long-term future, and it is not bright. Nordstrom's off 6% too. Very interesting to see even Target off about 5%. But a lot of these stores are linked together in ETFs, so selling one causes problems in the other. And Target probably a little bit more pin action. As I've been around going to some more stores than normally I would after a little move here. It's just hard for me to see anybody. I drive by the mall every once in a while to go to the movies, and I just do not see any kind of traffic there, even on Sundays when I typically go to afternoon movies on Sundays. It continues to look like the parking lots are less filled. I know we had Dick's Sporting Goods come out and say that they were going to be down for a while. I think that was, what was it, the beginning of this week or last week? I think it was last week. We talked about some of these going out of business and already a few of the teen retailers going bankrupt yesterday. It's just very hard for me to see these malls, the best of the ones people still kind of going to, but I think that the idea of the mall experience may be over. And I thought about it when I had to go get something today at lunch, and nobody had it. So I just ordered it on Amazon, and I paid the extra $5. I'm going to have it tonight. If you're going to be a store, I think you got to be able to carry stuff. And if you're not deep in things, people will just go to Amazon, and it becomes a bigger self-fulfilling prophecy because you carry less and less. Anything that you don't make margins on, you carry less of. And pretty soon, no one's going to your store at all. But retail sucketh, the big one today. Had a email, a couple of emails are ready. Where's my chart here? First one is Disney, and it's from Jamie in Green Bay, Wisconsin. And he says, he says, Disney is taking it in the shorts today. I think that's an understatement. Where do you see this stock going in the next few months? Thanks, Jamie, Green Bay. I think it was the whole Star Wars thing probably inflated this stock far more than it should have. As I said, when the movie came out, I saw it. It was an okay movie. Was it a reboot that came anywhere close to the 1977 release? The answer was no. There was too much political correctness in a lot of the stuff that they did. The new actors, the one gal, very good. Everybody else, including Hans Solo, man, I could make a couple of great jokes about them kind of sleepwalking their way through the movie. But, I just didn't catch it. I didn't catch, some of the old characters being around. It just seemed to me, all I could think of was that song by Ricky Nelson, Garden Party, where he says he'd rather drive a truck than sing anymore. I thought it was a great song. But it seems to me like they're just picking over the bones and not really looking at something that they could do to really add some strength to it, especially when you see the amount of people showing up for the Marvel movies. I'm thinking that maybe the same thing happens there. I'm wondering when Marvel fatigue comes in and starts hitting these companies. Of course, when we look at Disney, was it the movie business that was that weak? No, it just wasn't that strong. Where they were really lacking, people not going to the theme park. People probably just getting tired of waiting for 2-hour lines. My nephew and his daughter come down here probably once a year around Thanksgiving, and they went right after Thanksgiving this year again. And he just says, I get to ride on 5 rides during the day. It just takes a tremendous load out of us to go to the theme parks because they're way overcrowded, the Disney ones anyway. But it looks like a lot less people, at least that's what Disney's saying, a lot less people showing up to its theme park. Maybe a few going to some of the other new theme parks that have the Harry Potter stuff, but certainly looks to me like they've got at least a couple of weak legs of the stool. The question was, where do I think it's going? Right immediately, it's going to this $98 gap up that happened on the 18th of April. You had good volume, about 10.6 million shares. Of course, you already have, 21 million shares, and you're into that candle. So I think the first stop is this 98 level. And again, probably the biggest story of the next 6 months to 9 months is going to be cord cutting. I probably watch ESPN once a month. I think that would probably be correct. And if I didn't have to pay for it, I wouldn't care if it went away. It's not my particular channel. And of course, everybody knows that you've been forced to pay for ESPN forever as a package deal. As these things continue to walk away, you're going to probably see more and more of these things go to a la carte. And that probably continues to hurt Disney long term, although wasn't a lot in this earnings cycle that really had a lot to do with ESPN. Anyway, you've got that gap at 98, and I think you could easily see this thing back down to the double gaps that go back to the 16th of February at 92. I just think that they, like Apple, have lost their mojo, and a declining market that tends to trade this stock way in advance of what it probably should be. And the reason why, content companies have an EPS that is significantly lower than other companies. The reason why, we could go back to my discussion of Chesley, I can't even want to say it, Chesley Handler, Chelsea Handler. That is that it's easy to come up with a bunch of stinkers or have everybody decide that that's not new and they don't want to watch it anymore. So movie theaters, movie studios always have a low EPS. This one has a much higher EPS for content.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Yeah, it's an interesting move out here. Dano in Clearwater says, what should I think about Target? And is there somewhere in here that I could short it? And I think so. It's probably headed back to the 67.43, which is this February 12th low. You know, am I going to short a stock for $7, a 10% move in the price of the stock, maybe 12%, whatever it is? The answer is that for me, it does not have enough meat on the bone. I'd have to see this thing really want to blow through the lows of 66 before I would short it. But yeah, I think if you come back over here and actually probably get about halfway into this gap down at today, I think you'd probably have a fairly decent shot at it. And I think you have a high probability that as summer goes along until you get into the Christmas season a la September, probably going to see these things, including Walmart and Target, continue to be rather weak. So I don't see a whole lot of change in there. But that is it. I got some more emails here. Let me check them out real quick as we get into here. It's Herman's birthday. If anybody's ever been to TFNN's world headquarters, they may have bumped into the security guard downstairs who I'm trying to remember the deal exactly. I may be a little off, but I think he was in the Army with Elvis. Is that right? I think that's the story he tells many times. But no question, he's been around for a while, but everybody's kind of guessing his age. I'm not exactly sure, but a very interesting character in the lobby of the TFNN building. What else do we have going on out here? I guess we probably should just start looking at stocks and scans. Let's just look at all the movers out here very quickly, and we'll take a look at it. First, Majestic Silver, a nice little pop. It's retesting these highs from just a day ago, or a couple of days ago, let me put it that way. Get this back up here. Hang on just a second. Well, you got light volume so far today. You need about 10 million shares. The April 20th spike, $10.33, had 10 million shares. Got into it with 7.2 million shares on May 2nd, pulled back into the trading range. You're trying to bust through there today, 6.4 million shares. So it looks like you're probably going to have more than May 2nd, but less than April 20th. So you want to keep an eye on that. Alarm.com. I don't see much in that. Air Transport Services Group back into its gap. I don't see a lot in that other than maybe something that's coming on. Blue Buffalo Pet Products Another one of these trying to break out on earnings, pretty good. And the one thing is that these stocks, everybody wants to buy the dip. No one wants to buy the breakout, which is a common theme out here. March 30th, $25.98, 680,000 shares. You got 2.5 million shares, but it couldn't hold that March 30th high. Blue Buffalo Pet Products sells outrageously expensive dog food at high-end retailers like Petco and PetSmart. By all accounts, very good dog food, but I can't even tell that joke. But dogs don't seem to have great taste. As long as the food's good, I think they're okay. What else is going on out here? Gapping down, C&J Energy Services, as many of these stocks that are on their on the death watch are. This one has gapped down with some significant volume breaking through its previous lows. A lot of these energy companies that are in the dollar mark have been gapping down and look like they're going to be headed out of business in no time. Canadian Solar, I didn't see the news on this that made anybody think that this thing was going higher. Maybe it was just crude prices. Let's take a quick look at here and see what we have in headlines. I missed it. Up significantly, which is it. Let's see. First quarter earnings. First quarter module shipments were up 1.22 million megawatts, higher than the 1.085 megawatts. So business is up. Gross margins was 15.6% compared to 12% for guidance. So actually one not doing so badly. Of course, this is Canadian Solar. And one of the ones I actually bought in March of 2009. I'll always remember this going from $2 to 14. And I think it still went to 30, but I was out long before that. But I think at $2 to $14 was a huge move. What else is out here? Biopharma. Don't see much in this one. We'll just continue to go through these. A lot of stocks. We've already gotten to Disney. Electronic Arts. I have to say that, talk about a stealth company. I looked extremely hard at this one going into last week. The higher volume low out here made and scared me off. And also, I couldn't really get a good read on this company. They were incredibly quiet about how well their franchise it did do. Let's see. Let's go get the headline for this one. It was very interesting because I'd been watching a lot of these new games coming out and what you needed to know, but Battlefront looks like one of these kind of things that the movie studios have that they can just churn out, like the Avengers and all the other stuff that Marvel's churning out. That they just can't go wrong on it. Huge volumes on it. When we look at the chart, of course, let's go back a little bit farther for this one. Actually challenging its highs also, has not pierced it. You want to look at the 75 and 76 levels. But they've got some new stuff coming out for Christmas. Doesn't look all that bad. I think they could do well. But to buy this, you probably want it coming back to about 67, 68 on live volume. Fill this gap. On the next round up, if things go like a lot of people think they will and they have a good Christmas, I could see this thing go through the $76 level where you have multiple highs out at that level and the previous high. Gave a bit of it back because, of course, the market's kind of pulling back a little bit. But that's it. I got to get through all this spam out here. Off 17 points on the S&P Cash, 2066. I'll call it 2067 on the S&P Cash, 2.7 billion shares. And again, if I'm looking for confirmation that this is just options related for going delta neutral this day. What you would think is this thing's going to prop up about 6-7 points before the end of the day, which is what I watch, which still would put it down 10 points on the day, but maybe getting closer to a lock. We'll be back after this brief commercial interruption.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
As we're back getting ready to play that loser horn. Fossil, one that I'll always look at is one that got away. Tried to get it back up and around 100 and some odd bucks short. Pretty straightforward premise that people have quit quit wearing watches. This company, if you're unfamiliar with them, makes the Swatch brand and other brands of watches. It's just very tough to see how, with cell phones and kids not growing up wearing watches, not buying watches, there's still kind of a jewelry market, but seems like the under $200 watch business is pretty bleak. It doesn't look like it's going to change anytime soon, and they spent a great deal of money trying to go after Apple with their own smartwatches. Apple's hasn't gone anywhere, and Fossil's has gone even shorter. That kind of overhead and expenses continues to weigh on Fossil. Sometimes you get a buggy whip and people just quit using horses and carriages, and you're the buggy whip manufacturer, there's just not a lot you can do. I think that there's always going to be people wearing watches. The question is at what level and whether or not you're ever going to be able to do anything with it. Down on 15 million shares here, certainly blown through the last previous lows. A horrible business. And of course, I checked to see whether you could get shares short of this thing, and the answer was no yesterday. Pretty good indication that everybody was betting to a huge downside on this one. But, I think you can be back down to $10 on this maybe by Christmas. It would take a great deal for me to see that they'd changed anything, or that smartwatches are not going the way of tablets. Maybe we could say that. Rocket Fuel, one of these stocks out here, actually bouncing and then giving it all back. It's very tough for these stocks down at these low levels to get any respect, and any kind of move higher normally is sold very hard. But these penny stocks are bouncing. You just have to immediately take your cash on these as they move along. There's no waiting. If it pops, you better be out of it. Turtle Beach, one of the biggest stocks out here. Kind of a blast from the past, because I dealt a great deal with these guys back in the 90s. They made a product that went with the products that we developed. If you're unfamiliar with them, they make a bunch of pro audio cards for computers, digitalized audio. Kind of came out with a huge move again. You get a move like this on a penny stock these days, and man, do you need to sell it instantly or be left behind. A nice pop out here, the first sign of life. They did have a nice test of a low. The May 9th low only had 270,000 shares after it broke through the February 11th low that had 750,000 shares. So not a bad looking setup. I like the way that the energy came in off the February 11th low back up to this March 22nd high, and then the energy really came out as it went back down to this 83-cent low. A little bit more down here, and maybe check the books out and see if they are not going out of business. If not, might be a very interesting stock for the pennies this summer. Anyway, as always, sell when you can, not when you have to. And we'll see you here tomorrow. Same bat channel, same bat time. See y'all.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.